I'm currently stacking 10-ounce bars. I'm going to do that for as long as silver's under 16. I just think physical silver under 16 is just, or under 15, under 14, anywhere in there is just really cheap. My long-term target for silver is 150 or higher. I just don't think we're going to see sub $15 silver for much longer. This is kind of like the last chance. The other thing I'm looking at is producers. I'm looking at producers that I don't own that have 5-bagger potential.
This episode of Mining Stock Education is brought to you by Orin Resources. Orin is a junior exploration company with the appetite of a major, focused on finding the next globally significant discovery to create enormous potential upside for shareholders. It's one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. With Orin's unparalleled technical team and highly experienced management with a history of success in advancing and monetizing exploration assets, Orin has been called one of the best in the junior exploration sector. Orin trades on the TSX and NYSE under the ticker AUG. To learn more, go to OrinResources.com. That's AURYN Resources.com. Welcome back, ladies and gentlemen. Thanks for tuning in to another Mining Stock Education episode. I'm Bill Powers. Well, like my last interview with Rob Stevens, many of you have emailed me and asked for good books to read to get studied up on this sector. Many of you have come into this sector because you found the precious metals market and then you learned of mining stocks, or maybe you're a penny stock investor and you learned about the high potential that the gold stocks have if you do it right. So you need to get studied up on this sector. Well, one of the books that I read when I first found this sector is written by a man named Don Durrett, and it's How to Invest in Gold and Silver, a complete guide with focus on mining stocks. Don has been a frequent guest on this podcast, but it's been 6 months since I had him on the show. So I gave him a ring here. Don's on the line, and I want to say, Don, thanks for joining me today.
Thanks, Bill. Thanks for having me back. Yeah, I think this is the 3rd time we've done this.
Yeah, absolutely. And I should mention Don's website is goldstockdata.com. And Don, I'd like to get your thoughts to start off with on gold. Last time we spoke, you had mentioned you follow the gold market closely. You mentioned that if gold breaks through that 1375 mark, we could really begin to see fireworks in both gold and the gold stocks. We're about $100 below that right now where gold sits. What are your thoughts on the gold market, and do you see any near-term catalysts for gold?
Well, the near-term catalyst is really a couple of things. One would be the S&P 500, which has been up 19 weeks in a row. And I think a lot of people are nervous. I mean, it's trying to break out to a new high. I think we traded above a new high on Friday in the S&P, but it didn't hold. I don't think the close was above a new high. And so 19 weeks is pretty much went straight up for 19 weeks. We've had 1 week that had a bit of a pause, but other than that, it's been trying to break out. And I don't think that's the catalyst for gold for the fear trade. So if we don't get a new high and the S&P turns back down, depending on how weak it gets, we could see some movement into gold based on the fear trade. I don't know. It's definitely going to be economic weakness that pushes gold higher. I don't know when it's going to happen, how fast it's going to happen, but those are kind of the triggers. The other thing is the dollar. The dollar has been very strong lately, say for the last month or 2 months. It traded at, I think, at 98. It actually had one close at 98, and now it's back to 97.50 on the DXY. And that's definitely creating a lot of headwinds for gold. Gold made a run up to 1340 the first quarter, and then it basically sold back off and now it's down under 1300, trying to get back over. I really think that this is the last battle. You mentioned 1370, 1375. I agree. That was 6 months ago. That's the key number. So if we look at $1,300 gold, and you look at the HUI today is at 152. In September 2011, it was at 625. So that's 3 times return just to get back to a new high. And so you can see that the miners are out of favor at 152. And the reason why they're out of favor is at $1,300 gold, they're not making any money. So we really need to get up to through 1370 to 1400 before the miners really kick into gear. So we're kind of, we're fighting the battle right now. 1280, 1300, 1320 gold, that's just not high enough to get anybody excited about the miners. So we're kind of, we're just fighting the battle.
Do you think that the general equities, the S&P, could continue to trend higher, into the 2020 elections?
I do not. I really feel that it's topping right now. I think the market's overbought. I don't think, for instance, GDP, the first quarter, was at 3.2%, but the deflator they used was 0.9%. So the actual nominal was like 4.1, and then the deflator was 0.9. Now, who believes that inflation is 0.9? There's no way it's 0.9.
Yeah, my food bill doesn't agree with that.
Yeah, I mean, it's at least 2%. So if you put the real deflator in, the actual GDP is around, under 2%, maybe closer to 1.5. There's really no economic strength out there to push the stock market higher and to keep it there all the way through the election. This year in 2019, we are going to see weakness in housing. We're going to see weakness in autos. We're going to see weakness in consumer spending. Nothing's really, I really think this is a manipulated market. I don't think it's as strong as it is. I don't see it. This recovery started in June of 2009. So we're at the 10-year mark. And so that's a long, long recovery. We are, the business cycle is really long in the tooth. I don't see it lasting 2 more years. I don't see, the stock market going to 28,000, 30,000 here. I would be shocked if it does that. I really feel that we are topping here and we're going to get a correction. Now, how long the correction lasts, we don't know. I mean, if they drop the rates down to, quickly, could that conceivably, create some strength back in the economy? I really don't think so. I think that we're going to start to see more weakness kind of pop up. It's hard to predict when these cycles turn and how fast they turn. But the PMIs right now, the last couple numbers are shaky in my opinion. I mean, they're both positive. The services were trended down, but it's positive. The manufacturing is trending down, but it's positive. The global trade numbers are pretty ugly. So I don't know if we're going to get to 1370 this year. I'm hoping we do. Maybe we won't. But right now, as a gold and silver investor, we're kind of fighting the battle. We're kind of looking for opportunities and waiting for this thing to break out.
What is your analysis of the junior gold sector right now?
Well, like I just mentioned, sentiment is really, really bad. I mean, HUI at 152. I mean, that's the large miner index, and that is just that's a real ugly number. I mean, we really want anything under 200 is ugly, really. I mean, you want to be over 200 to have any sentiment at all. So anything under 200, the sentiment is just ugly, ugly, ugly. So right now, you don't have a lot of people that want to put their money in the miners. But the other side of the coin is the leverage is huge. I mean, if you do get in now, you could be catching a falling knife. But I mean, how much further can gold really fall? I mean, in theory, you could have a stock market crash and gold could go under 1,200. I mean, that's possible. But we are kind of bouncing on the bottom here. And to me, it feels like the gold market is bottoming, the dollar's topping. And if that's true, then things could turn for the miners, and they could do really well. I mean, you could be really catching. For instance, the HUI. I mean, it has a really, really long way to run to get it to a new high. Once it starts running, I mean, conceivably, it could run all the way back up. The numbers to look for me is 1325, 1330. Those are the numbers that need to hold so we can make a run at 1370. I mean, down here under 1300, we're not going to make a run at 1370 from here anytime soon. So we got to get, you have to do it in baby steps. We need to get over 1325, 1330, stay there for a couple weeks, and then make a run at 1370.
So you don't focus as much on the exploration stocks. You're more into the companies that have a resource, the developers, and also the producers, specifically the mid-tier producers. With where we're at now and the expectation that gold is going to run up, where are you focusing your investment dollars right now?
So where focusing my money. So with silver under $15, it just got so cheap that I decided that I was going to go ahead and buy some silver. So I'm currently stacking 10-ounce bars. I'm going to do that for as long as silver's under 16. So I just think physical silver under 16 is just, or under 15, under 14, anywhere in there is just really cheap. My long-term target for silver is 150 or higher. So that's a pretty good return. If you're buying it, 15, 16 is going to 150. So it's hard not to buy, physical silver at this prices. So I just I'm getting this feeling we're at the end. I just don't think we're going to see sub $15 silver for much longer. This is kind of like the last chance. So I decided to go ahead and do that. The other thing I'm looking at is producers. I'm looking at producers that I don't own that have five-bagger potential. Three stocks I'm looking at right now is Premier Gold. They have a big project in Ontario. It has a really big capex. It's like almost $900 million for the capex. So it's a risk. It's somewhat of a high risk stock, but they're currently a producer in Mexico and they have a market cap of 275 million. I have them, the upside potential of a five bagger if they build their Greenstone project. And the other two I'm looking at is Continental Gold, and they have I just think Continental is really cheap. They're going to be a producer in 2020, so they're a near-term producer. Market cap of 392 million in Colombia, and I just like their potential to grow. I mean, they have a really big project down there. And the other one I'm looking at is Yamana Gold. I've never bought it. It's down to a market cap of 2 billion. I have them. I have their future upside potential as a four-bagger. So they're right underneath where I'd like to, but it just looks really attractive to me. Now, as far as development stocks and exploration stocks, you just have to be really, really careful because they're just very, very high risk. I mean, the risk reward on exploration stock is not good. You want to make sure that you buy a company that has the goods, if you will. So going after an exploration stock that does not have, a mine already, they're just trying to find one, or they have a few good drill results, and you're going to chase drill results. That is just, the ultimate speculation stock. Now, I do that once in a while, but I know how much risk that entails, and I don't do it until I have, and I talk about this in my book. I don't do that until I have everything else covered in my portfolio. I have the physical metal, I have the majors, I have the mid tiers, I have a real good foundation, and then I might go after, first the development stocks, and then at the very last the exploration.
What's your ratio on that? You invest up to, what is it, 1% of your portfolio you'll put into a stock like that? Remind me.
Yeah. So for an exploration stock, I never go more than 1% of my cost basis in my portfolio. And I usually go 0.5%.
Per company, per exploration company.
That's per company, yeah. So never more than 1% of your portfolio on an exploration stock. I don't. Per company, of course. And then even with your stronger mid tiers, I never go over 3%, and 3% is kind of the very upper edge. I try to go really strong mid tier, 1% to 2%. So some people don't agree with my philosophy because I spread it around, right? If I'm only putting 1%, 2% in a strong company, then I have to own a lot of stocks, and I do own a lot of stocks. But what I do is I'll do the ETFs like GDX, GDXJ, and I'll do some of the major mutual funds, gold mutual funds, which with higher percentages to reduce my risk. I don't feel that if you're doing like There's a silver miner ETF called SIL, which I think is a fantastic investment right now. It pretty much covers all of the silver miners.
Mm-hmm.
So you get exposure to the entire silver miners just by one ETF versus, putting a whole bunch of money, in one. And most people, they prefer to have put a large amount of money in one bucket, own like 10 stocks or 20 stocks and focus. And yeah, I mean, you can, Jim Rogers says that's the best way to make money, and it probably is. But in gold and silver mining, the risk is just too high, in my opinion. You just never know what those individual stocks are going to do. It's hard to predict which ones are going to perform the best. And also in gold and silver mining, I feel that you should ever do everything for the long term. You really shouldn't be doing it for the next 6 months or the next 12 months. It's not conducive to that. Gold and silver is more about catching the upside, or this is kind of a once in a lifetime thing. If gold goes to $2,500, $3,000, you want to have a position. But that's a once in a lifetime thing where you make your 500%, 1,000% return in a relatively quick amount of time.
And not only are exploration stocks risky, but sometimes even a mid-tier company can be risky. We saw recently that Guyana Goldfields, they lost, I believe it was like 1.7 million ounces of reserves due to a miscalculation of their ore deposit.
Oh, absolutely. All the mid-tiers, Goldcorp just got taken out, but now they're having, Newmont's having trouble with their largest silver mine. If Goldcorp wouldn't have gotten taken out, they probably would have dropped, at least 10%, in a single day once they closed that mine, maybe more than 10%. So, and Goldcorp was a $1 billion company. So, yeah, none of these companies are absolute, fail-safes, if you will.
With that, the mega mergers, you mentioned one of them. How has that affected the way you approach investment right now? Are you a little more cautious when you're going after some of these late-stage development plays because maybe the majors are going to, cast off and sell off some of their what they would consider second-tier projects?
I always see these consolidation mergers as a net positive for investors because it reduces the number of companies that are available. So I think it pushes up the value of the entire sector. For instance, right now, I mean, we've seen 2 majors get taken out in the last year, right? We saw Goldcorp get taken out and Rand Gold get taken out. So 2 big, strong companies got taken out. And so that reduces the number of, for instance, billion-dollar companies. There's less than 30 billion-dollar gold producers in the world. So when they start shrinking, there's less to go around. And so it gives investors less choices, if you will. And so when this market does catch fire, people only have so many choices. So they're going to bid them all up, and everybody's going to be a winner, if is my expectation. Another sector that's consolidating that a lot of people aren't taking notice of is the silver producers. Because what's happened over the last 5 years, 10 years, is that the silver producers keep buying gold mines. And so they're no longer pure silver miners. And for instance, Hecla used to be a silver miner. Now it's a gold miner. That's what's happening. Coeur is another one. They used to be silver. Now they're primarily gold. Pan American they're about a gold miner. And so you're seeing more and more these companies no longer. So there's very less. So if silver takes off and silver runs to 50, 75, 100, the companies that are still pure silver miners are going to explode because there are very few of them left. And I don't think a lot of people have recognized that. And these silver companies have not been getting recognized for that potential value, the leverage that they currently have. For instance, the GSR ratio, today I just checked, it's at 86. 86, that's near an all-time high. So the silver miners have 2-to-1 leverage over the gold miners because that ratio is going to cut in half. Guaranteed you it's going to cut in half to 40. It did that last time in 2011. There's no reason why it won't again.
Yeah, no, that's a good point. It's kind of interesting. I wasn't expecting you to say that you were buying silver 10-ounce bars. I've done that myself, but yeah, with silver under 16, I remember, Don, I was buying in the 20s years ago, and I thought I was getting a good deal back then. So I totally understand, your rationale for loading up on that now, but that did take me by surprise, rather than mentioning silver miners first. But as you say now, silver miners are also a good deal.
Well, the reason why, see, I've been doing this for a long time, so my portfolio is pretty much finished. I mean, I pretty much own all the silver miners out there. So I don't have any silver miners on my buy list. Otherwise, I would be probably buying the silver miners instead of the physical silver. So last year, I was accumulating Litecoin. I accumulated Litecoin for pretty much the whole year. And now we're seeing Bitcoin come to life. And I was accumulating Bitcoin, when it was sub 1,000. So now, last year, I accumulated Litecoin the entire year instead of buying miners because like I said, my mining portfolio was pretty much finished. And now, after I finished accumulating Litecoin, I decided, okay, now what can I accumulate now? So I started accumulating physical silver just because it's sub 16. At the end of the summer, I'm not sure what I'm going to do next. I'll have to wait and see what looks attractive at the end of the summer. But at the end of the summer, it'll probably be physical silver.
Don, I have a lot of new investors, as I mentioned in the introduction, that get a hold of this podcast and listen. I'd like for you to speak to them for a moment. If you're sitting down with a new investor, and there's many of them listening to us right now, a new resource investor, what would be some of the key advice you'd want to give them?
Oh, that's a great question. So, first of all, my new book's out. It's not my new book. I've updated my book. I haven't updated it in 3 years. So there's probably going to be a link on your website. So people put a link to my book there. So
yep, I'll put it in the show notes.
And this is the 7th edition. So I haven't updated it in 3 years. So first of all, read that book. It's going to show you a lot of, it's basically a guide on how to do it. It's pretty in depth. So there's certain rules you need to follow. One, I tell people, don't chase drill results. You can do that once in a while if the stock is trending upward. If you see a stock, for instance, let's say it's trading under 20 million market cap, say 5, 10, 20, and it doubles in value based on drill results. Yeah, you can jump in with it, and chase those drill results and see where it goes and double your money fairly quickly. But just recognize the risk. A lot of these stocks will pop up, double, triple in value, and they'll crash back down. So if you're going to chase drill results, use stop losses. Also, don't invest in companies that don't have the goods. You want to make sure that I call something what they call flagship companies. So a flagship company is a company that has 40 million ounces of silver or 2 million ounces of gold. So if a company doesn't have a flagship property, then your risk is really increased. Most of my losses have been in companies that just didn't have the goods. So that was the other one. The other one we mentioned earlier about putting a lot of money in a single stock. I always say 3% max, and if you do one stock at 3%, that should be the only one at 3%. Don't be doing 4 or 5% in a single stock. It's just too much risk. And then 1%. There's nothing wrong with doing 1% of these stocks that are gonna return really good. Now, I don't have time to go over all the various things you need to look at. The properties, people balance sheets, stuff like that. So you can check my Seeking Alpha articles. Each article I usually mention the things that I look at in a particular stock, and then you can do the book. You can come to my website. I don't think I have a link to Seeking Alpha though in my gold stock data. But you can do a search on Seeking Alpha by my name, Don Durrett, and you'll find I usually post one article a month, and it has all my tips in there.
Yeah, and I think you have like 2,000 followers on Seeking Alpha. You're quite popular.
Yeah.
All right, the book is How to Invest in Gold and Silver, a complete guide with a focus on mining stocks. We've talked about bullion, 10-ounce silver bars, and mining stocks. Don's book covers it all. The first part of the book deals more with precious metals investing, and the second half deals more with mining stock investing. And if you're newer to this sector, you do want to pick that up. If you want to check out Don's website and his paid service there, you go to goldstockdata.com. Well, Don, I appreciate you joining me again, and I look forward to catching up with you again.
Thanks, Bill. We'll do it again.
This episode of Mining Stock Education is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex Trend and is advancing the Copper King project towards production in Wyoming. Led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who's directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-financed and has an extremely tight share structure with less than 20 million shares outstanding, and it trades on a major stock exchange, the NASDAQ, under the ticker USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold. Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.